So after we analyze all the documents supporting the business transaction, let's go to step two. Okay, so step two is the journal entry. The journal is also referred to as a day book and also the book of original entry. This is where the journal entries of the business transactions are recorded and entered in the accounting system. So once the transactions are identified and analyzed, they are recorded in the general journal. So each entry includes the date of the transaction, the accounts affected, and the amounts debited and credited. So you will find this information in your supporting document, the amount and the account. And also you'll have to describe what kind of transaction this is. So, for example, you have a credit sale. Your customer bought worth 10,000 worth of goods from you, but it is on credit. So, you will issue that customer an invoice, and that invoice will be your supporting document. So from that, you will be able to identify the amount of the amount of uh, the sale, the sales transaction, which will affect the accounts receivable and the sales, and also your inventory and cost of sales. So let's go ahead and enter the journal entries for the transactions we have in the example. Okay, so these are the following are the transactions of Luna Law Office for the month ended May 2023. So we are going to provide the journal entries for Luna Law Office for this month. So on May 1, Miss Luna invested her savings to her law practice in the amount of 50,000, and she also obtained a bank loan in the amount of 100,000 for her law practice. So on May 1, that is the date, the first transaction is she invested 50,000 in cash and we credit Luna Capital in the same amount of 50,000. So let's format this one and this one. Number. So she also obtained a bank loan in the amount of 100,000 for her law practice. So that would be debit cash of 100,000 and credit loans payable in the same amount of 100,000. So on May 5, Miss Luna purchased office supplies in the amount of 2,500. She also purchased office furnitures and equipments in the amount of 8,500. So we'll debit office supplies for 2,500. We'll debit office furnitures and equipment in the amount of 8,500. And we will credit cash in the amount of 11,000. So on May 8th, she rented an office in the amount of 750 per month. So let's assume that she paid the loan, the rent for her office for the month of May. So we'll debit rent expense of 750 and we'll credit cash of 750. So it says here that on May 12, she hired Mary to be her legal assistant. So this has no financial value yet. So we will not record anything here in the journal entries. So on the 15th, 5 clients came by and paid Miss Luna a retainer fee of 5,000 each. So we'll debit cash in the amount of 25,000 and credit income in the amount of 25,000. So on the 17th, another 3 clients paid Miss Luna her professional fee for winning their cases in the amount of 30,000 each. So we'll debit cash in the amount of 90,000. That is 3 times 30,000. And credit income in the amount of 90,000. So on the 31st, the last day of May, Miss Luna paid her utilities in the amount of 2,000 and she also paid Mary her salary for the amount of 3,000. So we'll record this too. So on the 31st, we have 2 transactions. So we'll debit utilities expense in the amount of 2,000 and salaries expense of 3,000 and credit cash in the amount of 5,000. So that is our journal entries. So next we are going to post these accounts to the corresponding accounts. We are going to use the T accounts now.